Hi, Warriors. Let's see. Today is Tariff Turnaround Tuesday today. It's a lot of T's, isn't it? So, dollar weakness off the gun, follow through selling in S&Ps. There's a divergence showing up on a 4 hour. I'm going to be talking about cable. And nowadays, these tariffs are not just economic, they're also could be political weapons. And I was thinking about, what has happened with President Trump and President Zelensky, and then Prime Minister Starmer stepping up to lead a European coalition with a peace plan. Um, I don't think that's going to be well received by the U.S. And I also think that Starmer's politics are the opposite polarity of Donald Trump's. So, liberal government in the UK. So, I don't think that cable is really factoring in what kind of tariffs could be launched against the UK, let alone Europe. Okay, so Europe too can be, might be discounting tariffs. We have the ECB, but I still like what's happening, that there's potential for a cable sell-off that kind of makes it a little bit special for a political reason. I'm just waiting for TradeGATEHub to come up and um, the stream show up for me so I could include other people here on Periscope. So be patient with me. Gold is following through to the upside. Dollar retested its lows. US dollar yen actually made new lows. And I'm also going to be talking about that there might be a new paradigm, the way that FX is reacting to risk off. If you just look at the screen yesterday, when we had huge risk off many days now, the dollar is not getting a flight to safety bid at all. Okay. So the new paradigm, which is different, is normally markets down, dollar up. Now I believe it's shifting from markets down here, that there's some capital flows moving out, which is not the way it used to be risk on. It actually is risk off, is a weak dollar. So here we go. So just like I have to be patient, waiting for TradeGATEHub to light up for me. We need patience in these markets, especially with this kind of volatility. So here we go. Let's get to the charts now. So why don't I start off with cable, which is coming off pretty dramatically from its highs. I was a day early. I shorted it, but I used a 100 pip stop from 27.08. So was able to survive it. You can see the divergence that we're starting to get here. This may have just been a stop hunt for people that wanted to um, be long the dollar going into tariffs. So we've made new lows. There's also divergence here. And yesterday when I was on, I said it looks like the yen is going to make a new low, and I try it there. So I am trying it here and see if we could get any kind of turn in yields. I don't know if it's going to be the employment number. Um, the TLT still looks pretty good, except that we're diverging. And wow, what a move! So rates are coming off. That's the problem with US dollar yen right now. So was that a false signal that we had? Well, last time it worked, remember the three P's, right? You probe, which I was doing here, and then you take partials, which I was doing here, and then you protect the remainder with BE stops. Same thing um, happened in the dollar last week. You probe, right? You have your stops for your initial position. Then once the market moves your way to partials, and then yesterday I tried to buy it, thought we were going to put in a higher low. I'm out. But I would not short the dollar here. Everyone's talking about a collapse. I have other things going, so I really don't have to add to the dollar. I like the fact that cable's showing relative weakness, and here's a shift that we're getting in euro pound, which tells you that now cable is your preferred short and euro's your preferred long. So this could be getting ready to make a turn. We could also, have a three down here, but this spread is going to be very important. Right now, it's saying that cutting through this moving average, it makes pound the preferred short when I'm bullish a dollar, and euro the preferred long when I'm bearish a dollar. So precious metals, remember I talked about it being at that moving average. I couldn't buy it. So far it looks like it could be a failing rally. Silver was much less impressive. Silver still looks heavy to me. Maybe it's going to try and form a right shoulder down here. Might be worth a try, but we could also go to 30.50, which is a lot of confluence. And the gold shares, the miners didn't act that great with a couple of good up days. And yeah, so this will take us down to about 30.30 if we break that uptrend line. So there you go. And gold, maybe this is a failing rally in gold, and we still get one more pullback. So I want to talk a little bit about risk here in the S&Ps. What are they doing now? They shift all over the place. So we're, not too far away from the lows. We're at 58.12. We've made new lows so far, right? Took out yesterday's lows. I just want to make you aware of this, okay? That we are diverging here, okay? NASDAQ looks like a real nice little three drive here. Now, I'm not in the camp that we're going to rally to new all-time highs, but I am in the camp that we have record put buying now. We haven't seen this for a long time. Sentiment was bearish at the top, which is unusual. Usually there's euphoria at the top. So sentiment's been right to be bearish, but we have in a couple of weeks, besides the Astro stuff, we have an option expiration. So the option writers, which is what the guys do when you're buying calls and you're buying puts, they take the other side of the trade. They've already collected um, most of the call premium, at least all the time premium, and probably most of the calls that people were buying in January or November for March are now underwater. So who has the money made right now? It's the put owners, and there's a record amount of them. Is it possible that a rally could occur, be engineered to take away the put buyers' money into option expiration on the 22nd? And that's my bet, is that that's going to happen, and we're going to have a recovery here. All right. So to me, that's pretty important. Um, you're getting a lot of bearishness, and I'm looking for a turn. So I would, draw some fibs, and perhaps this, we're getting close to this whole first wave completing, and now we're going to get a wave two before a big decline. So I know a lot of people are still waiting for 6,400 or better. I would view any rally, if you're still long, as probably a good reason to raise cash. And if you're a spec trader like I am, you're going to see it as a shorting opportunity. And one of them, we are open now. Want to show, look what's happened to the banks from yesterday after making a new high in XLF. Pretty ugly. Bank of America. There must be some problems with this kind of action. Look at it. I mean, B of A is almost at that low. Here's KRE gapping lower. So now the problems seem to be shifting to the financial arena, which makes sense because part of any bear market that's long lived, that there's going to be some problems with paper, okay, duration. Bitcoin, wow, what a lot of volatility. I would say that, we're putting in higher low. So, I'm not doing it, but if you like Bitcoin, I thought we'd see 75, but we had that announcement, had a pretty good pullback. For a trade, you could probably try it here and be wrong under 74, or have put a little on here and then buy more down at 75, which is, how I would approach it. Scale in with small, go small, and hope you're early so you could get better levels down the road. So here's Amazon. We look at the mag all the time. Here's Amazon, still cratering but diverging. Remember, and this was really the star. Apple still holding up pretty good. All right, held that uptrend line, still holding here. It's going to look ugly um, under 236. If I'm right about some type of recovery in the market after these tariff announcements, we could rally back to resistance again in Apple. Uh, let's look at the rest of them. I know Microsoft was under some pressure. Meta was a star. Remember the moonshot? Wow, look at that. Huge trade. Google was weakness. It's trying to hold. You could see there's a little divergence here, right here. Here's Netflix, which still has a confirmed RSI at the highs, approaching some moving averages, flat bottom. Maybe it has to take this out. I'm not a buyer there. Here's Microsoft, which broke down under that 400 level, following through but beginning to diverge. And here's NVIDIA. It looked like a breakdown. I guess the question is it a false breakdown? So I'm going to try an exercise of patience here. Okay, so I had lines here. And the low here was what? 108. Okay, so if I take this rally here and I'm right about a recovery in the market, I still think I may get a chance to sell NVIDIA towards the end of the month back up here. So not doing it in the hole, not getting long except for scalping S&P futures, but being patient for new put positions into, that's the theme, into option expiration. So I think the next 2 weeks could be recovery, maybe in the market, maybe in the dollar, pullback in yields where TLT may as well look at it. I still think it's ripe for a correction, but of course, we have the NFP on Friday. That could throw that out of whack, but I would say on a turnaround Tuesday, probably not a bad time to be considering um, perhaps TLT puts for a trade. Not for a crash, but for a trade. Okay. Of course, we're above all these moving averages, but if we could start getting fill this gap at 90, that would be negative. And if we're putting in a right shoulder, symmetry would take it down to 88. Okay, so S&P is making new lows now. Let's see how we respond today. And I'll see everyone in the room. There we go. New lows there. Are we getting them in NASDAQ? NASDAQ seems to be holding up a little better. It's down. It's funny to say it. It's down 1% compared to 1.2 in the S&Ps. So I think that scenario could happen. Miners, I don't think you have to be in a hurry here yet. Maybe GDX still is going to trade towards this 38 level. There's a gap there and a lot of moving averages. So maybe we get one more shot down in GDX. The silver miners still look ugly to me. You haven't missed anything. I hope I saved you money by telling you to at least sell partials of your miners. That was up near 42. We were over 42 before we finished. So it's already 10% there. So a lot of percentages are coming off the markets. We're near 5% lower in the S&Ps already still, I don't see panic. I'm not getting phone calls from my relatives or friends that are saying, that Dale, what should I do? That's probably going to be the more important bottom. But, my long-term objective here, and I've shown this megaphone formation for months now while we were distributing at the top. I don't think we're done until we get down to, happen to my lines here. Okay, try the daily. Okay, so it's down here. Yeah, the top line. Anyway, some of them got a raise, but basically price wise, you could probably use this moving average or uptrend, and a lot of them coming in around 4,900. I also had a wedge line coming in there too. Um, this is where I think eventually we're going, and then after that, I think we could make new highs. So a look ahead. Keep an eye on the pound. We're in a very even global divisive situation with old relationships changing, and I think the pound could end up being a casualty of what's happening with the peace process in Ukraine. So watch that. My initial targets are 25. So have a good day trading, everyone. Good luck. I'll see you tomorrow, and don't forget Thursday. I'm going to have Peter Grandage with me. Good hunting the rest of the day. Let's take this pound lower, and we'll see what happens with the rest of the market. You don't have to be in a hurry to buy silver either. Maybe look at it at 30 and a half, or let it show some strength and at least start closing over 32 and 33. Then you could go with it. So that's what I see. I hope you're learning the reasons behind. I give the reasons technically, and if there's a fundamental narrative, I share those too. And good luck. These markets are wild. So again, trade smaller and use wider stops. But for sure, promise yourself you won't enter an open position without entering a stop at the same time. Make that promise to yourself so you don't end up trying to day trade and then, well, it'll be a swing trade. Well, now it's a position trade and now I'm investing in it. So the difference between pros and amateurs are pros know how to lose, so they have money left to be right with. Don't just count your pips, count your blessings. I'll see you tomorrow. Adios in the room.